Something weird is happening with China economy, and I don't want just to throw some words out there, but some of the news that we have got recently from China signals to the fact that China's economy might be on the brink of collapse. And I'm not just going to throw some words out here. What I will do simply is that I will present you with the facts, I will present you with the news that we have on the ground, and then I will just give you some context around that. And then at the end of it, you can decide for yourself how bad the crisis is. I don't want to exaggerate the crisis because I don't want to inspire fear, but you have to understand that the news that we have, if you understand the context around it, you will absolutely change your mind. And the reason it's so important for us as investors is because China is the second largest economy in the world. Anything that will happen to China will have serious consequences, not just on the US economy. US and China economy are so interconnected that anything that would happen in any of those economies will have serious consequences on the other. Yes, recently those two economies started to step aside, try to get some distance between themselves. But overall, if you take a look at what's happening right now, you will realize that these two economies are very interconnected. So anything that will happen to China will have serious implications on the US economy and the US stock market overall. Because a lot of US companies are relying on China for everything, from just getting the components to manufacturing their entire products in China. And China is also the largest trading partner for over 50 countries out there. I think you can Google that out and find it out. So anything that will happen to China economy will impact those 50, 60, or probably like 70 countries. And anything that will happen to like 50, 60 countries around the globe will have serious implications on the global economy, therefore on the United States and overall. So let's just get and understand what exactly is happening and how bad the crisis that we have in front of us is. So recently we got the news that China started giving out money to people. And that might not seem like big news, especially if you are from US or any other Western country. Like if you go back to 2020 and 2021, we had governments literally just giving people money for them to spend. And we have discussed those reasons previously, but that was not the case in China. If you go back to China during the pandemic, China was not giving out money to people. In fact, China was like, yes, we have kind of locked you in your houses. We are not letting you work or anything like that, but you have to survive on your own. So use your spending and kind of somehow get food on the table. And that was one of the main reasons that stopped the Chinese economy. And that created a lot of distrust, I would say, between the Chinese people and the Chinese government. But right now something different has happened, and China suddenly is like, we are going to give money to people. Why would you think that is the case? Especially if you go back during the pandemic era, there are videos of top Chinese officials that say that we're not going to give money to people because that is going to create a lazy culture where people will just depend on the government for their survival. And that's something that Chinese government does not want to. It creates a sense of laziness. Why would I go to work if the government is going to save me anyways? If the government is going to hand me money anyway? That was the sentiment that they actually boosted during the pandemic. And now suddenly that is changing, and the Chinese government, even though that right now they don't need it as much as they need that support during the pandemic, they are giving money to people. Ask yourself, why would the government suddenly change its policy to start giving free money to people? The main reason behind that is that the Chinese government wants to boost consumption. And how bad the situation should be in your country that you want to fundamentally change the entire policy of the government so that you want to boost the consumption. And this is not the only news that we got recently from China. The second most important news is that China cut interest rate significantly. Maybe from 2.3% to 2% is not really that much when it comes, for example, to the United States, because we just had like interest cuts of 0.5 basis in September in the United States. But to China, that is a lot. China rarely cuts interest rates. And the reason it does that is because China is afraid of something that we call inflation. If the government is going to lose control over the monetary policy in the country and inflation will get out of hand, it has some catastrophic consequences for the economy. And because China is such a large economy, if something happens, it can lead to a domino effect and destroy the rest of the economy. So the government is very careful at how exactly it's managing its economy. It's very careful what policies it's taking and how much it's reducing its interest rate. Because reducing further interest rate could actually lead to people taking extra loans, making risky investments, or anything like that. Now, the third most important thing to pay attention to is that China suddenly started giving billions of dollars to its banks. Why would the government suddenly start giving billions of dollars to banks that are doing not bad, I would say? I won't really say that Chinese banks are doing fantastic and growing tremendously, but the matter of the fact is that Chinese government is not certain or does not have enough faith that the following crisis that is about to take place in China is going to be so bad that the Chinese banks might not survive. And that's why it's actually giving them billions of dollars. And each of these news individually might not really make a lot of sense, and some people might question the importance of this news. But overall, if you actually take a look at these three things, you will realize that this situation with spending is so bad that the government does not know how to solve it, and that's why it's taking extreme measures. It's giving people free money, it is cutting interest rate, and it's giving huge banks billions of dollars. In fact, over almost $150 billion in order to save the economy. And that leads us to ask ourselves the question, how bad the Chinese economy is that the government is taking such extreme measures. The problem is that if you take a look at the growth of China economy, you will realize that, for example, I have the data since 1998, and the growth has been spectacular. In some years, it's reached like probably 14%. And 14%, as we have discussed in previous videos, is a lot, especially if you compare that to countries like the United States and Western Europe. But overall, the trend is very clear. It's going down and down. I mean, I can understand that the growth in 2020 wasn't really that much, but we're already out of the pandemic. It's 2024 over here, and we can't even hit 5% growth rate. If China can't hit 5% growth rate, what do you think? What signals does that send to the world? What signals does that send to investors? What signal does that send to other companies? But the question that I want to ask myself here is that what exactly is stopping the growth in China? Now, there should be a reason. It's not like suddenly we had this astronomical growth over the last 40 years or 50 years, and now suddenly the growth is stopping over here. What exactly has stopped that economy to grow? And that answer to that question is very simple. China might actually get into a deflationary period. Now, you might ask yourself, what exactly is deflation? Now, if you know what inflation is basically an opposite of deflation. Inflation happens when the money that you have in your bank, when the money that you have in your wallet, when the cash that you're holding in your pocket is losing its value. Like, think about that for a moment. Like 10 years ago, you could buy a lot of things with $100. Today, you can barely buy a Nike shoes with $100. And that's what inflation is. It's not just those Nike shoes became somehow more valuable. It's simply because the dollars that you have in your pocket became less valuable. And while inflation from one perspective is really bad, if you look at it from a different perspective, inflation is really good. When you know that the value of your money is actually when you know that the money that you have is becoming less valuable with each consecutive year, what are you going to do with that money? You're most likely going to get out and spend it. Buy yourself new shoes, maybe a new iPhone, maybe a new car, maybe a new house. And even if you don't want to buy anything that you want to consume, you can take that money and invest it somehow. Maybe in the stock market, maybe in properties, maybe in a startup. And the reason you want to do that is because you want your money to at least make some money so that it does not lose its value due to inflation. So that logic is perfect for the economy to grow. The more people gonna spend money, the faster the economy is going to grow. And even though there is some kind of inflation, because of the growth of the economy, you are going to make significantly more money than inflation itself. And now, what do you think happens when people stop spending money? Prices go down. Imagine we have, now let me give you a very simple example. I have drawn a little chart over here to explain the point with demand and supply. Let's say this is supply. I mean, the red line that you see over here is supply, and the green line that we have is demand. This is demand 1, and this is demand 2. Now, this is the first equilibrium where we have like 50 products in the market, and then the prices, I mean, if we take demand and supply and we find the equilibrium, which is where demand meets supply, it's going to be $20. Now, what do you think happens when people stop spending money? People stop spending money means less consumption, right? And less consumption means that demand is going to go down. Now, the demand is going to go down to $15, for example, and at that price, because the demand for the products is around 40 quantity and the price is going to be at that rate 15. Now, this is of course a hypothetical example I'm just giving, but because supply stayed the same and the demand went down, because we have the same number of, let's say, Nike shoes in the market, or any kind of product that you can take, but because now people don't want to spend their money, the prices are going to go down because the suppliers have to somehow sell the products that they have created. Now, what message does it send to the market? When people realize that they're not spending money, prices are going down in the market, they're like, why would I buy the same house today when I can just wait another year or 2 years or 3 years and prices will fall farther, and then I'm just going to buy it? Why would I buy new shoes today when I can wait a year from now and buy that shoes 20 or 30% cheaper? And that's what deflation is. So if you think about it, with that kind of logic, people can wait so long until prices go to zero. And if prices go to zero, then the economy is going to collapse. So in somehow, even though that inflation is bad, even though that high inflation can lead to hyperinflation and lead to the catastrophic end of the currency that you have in your pocket, and when that currency becomes absolutely no valuable at all, you can't use it to buy anything, and that can destroy the economy. But the absolute opposite is also true. When you have deflation and prices are going down so fast that you don't know how to stop them from going down because people don't want to spend, what do you think is going to happen? Now, there is a point where price is going to hit zero and there is no business. And when there is no business, people are not going to spend money and the economy is going to collapse as well. So deflation is as bad as inflation. In fact, you can stop inflation to a certain extent by kind of raising interest rate, like in some countries where they experience massive inflation. I mean, if you go to the US, you will realize that like back in now I can be wrong with the data here, but probably like in 1980s, we had like massive inflation, and then we increased interest rate to like 20% or 25%, if I'm not mistaken. And then, yes, we got a recession, we got a crisis, but inflation came down. But when you have inflation and you can only decrease interest rate to 0%, and if that doesn't work, then what exactly is going to happen? Then the economy is going to stagnate for a very long time. And that's the problem that China is facing right now. It is very afraid that the economy might fall into a recession, not a recession, but a deflationary period, so the economy will simply stop growing. And now, I know that this sounds theoretical, and some people might say, "Oh, this is just in theory. It's not gonna happen. It's not gonna happen in reality." Now, let's take a look at a real example at an economy that actually happens something like that. Now, this is Japan's GDP, and Japan is one of the largest economies in the world. Like Japan, in the last century, was the leading economy in the world. And if you go back to what was happening back in the last century, you will realize that there was like a serious competition between the United States on one side and Japan on the other side. And people were like, I mean, the US was so angry that Japan was about to take over the United States as the world's largest economy. And Japan is not like a random country. It has a very long culture, a very long history, and it has a pretty sizable population of around 120 or probably like 40 million people. And even when I was a kid, I'm not really that old in order to kind of catch up the peak years of Japan. But even when I was a kid, I remember all those Japanese brands were everywhere. I mean, even today you have some of the top companies out there. Toyota, which is one of the largest manufacturers of cars. We have Honda, we have Mitsubishi, we have Nissan. And these are just some of the brands. I think We have a couple of more car brands out there in Japan, but these are some of the popular and are still leading the world to a certain extent. Yes, their influence and market share dramatically dropped in the last few years, or probably last 2 decades. But if you go back like to the last century, Toyota, Honda, and Nissan were probably the most popular car brands out there, and they took over the entire US market. And if I'm not mistaken, Ronald Reagan imposed like a huge tariff on Japanese cars because American car brands could not compete with Japanese cars. And besides cars, we had like Sony. It was one of the largest electronic companies in the world. And I think even back in the days, Sony was actually one of the largest producers of semiconductors. Of course, these semiconductors were not as advanced as we have them today, but it was one of the largest. We had Panasonic, Toshiba, Nintendo, Sharp. Who do you think is getting your PlayStation, for example? It's of course a Japanese company. And these are some of the companies that we had from Japan. The list is probably significantly longer than this list, of course, but I just want to bring these companies in order to illustrate to you how powerful Japan was back in the days. And if you take a look at the GDP of Japan, here is, for example, from 1980s. What is happening over here? Look at this growth. It has grown from $1 trillion to $5.5 trillion. Now, this is 1990s. Now, if you take a look at the economies today, look at the British economy. British economy has a GDP of like what, $3 trillion? Like, think about that for a moment. Japan's GDP back in 1990s was almost twice as much as the British GDP today, this year, or even compare it to the French GDP. So basically, Japan's GDP back in 1990s was much larger than even Germany's GDP today. And Germany is the most leading and advanced and most powerful economy in Europe. And that's how powerful Japan actually became during those years. And that growth was literally amazing. I think it was one of the fastest growth ever. And you have to also understand that Japan wasn't this country that was growing for hundreds of years. Yes, we had a Japanese empire. But remember, there was something we called World War II. And in World War II, I think Japan was one of the countries that was entirely eliminated, destroyed. I don't want to get into the details, but you perfectly know what has happened in Japan back in 1945. And Japan is not like this huge country with huge mass land. No, Japan is like what? It is like one of the largest islands, and then it has like a few more islands out there. Not maybe a few, probably more than a few, but it's like a collection of islands out there. And that's why even though it was catastrophically destroyed back in 1940s, it emerged and became the second largest economy in the world and was on the brink of getting Japan. And now, what I want you to pay attention is that this was the peak that Japan actually reached. And then the economy after that collapsed because there was something we call a bubble. And a bubble, they have a tendency to burst. So when the Japanese economy actually led to a bubble and it burst, the economy stagnated after that. And since then, the economy, you can clearly see what is happening. For the next over a decade, the economy barely actually grew. Just when the Japanese economy started growing and the GDP started actually reaching a new peak, that was during I think it was like back in 2000, almost 10, when the 2008 financial crisis actually happened. I think it happened over here, yes. The Japanese economy crashed again and collapsed. And since then, it is going down. And as you can see that Japan's GDP today, this is probably 2024, is significantly less than it was back in the days, back in 1990s. So ask yourself, what exactly has happened during this period that Japan's economy, I'm not saying that it stayed where it is. It actually dropped significantly to around $4 trillion. And even based on the estimations that we have over here, as you can see, it's not going to catch up to its 1990s anytime soon. That actually led me to ask myself a simple question. What exactly has happened? And the answer to that question is very simple. Deflation. Deflation is when prices started going down. When the bubble burst in Japan, people or Japanese people were afraid to spend money again. So what exactly do you think they started doing? They started saving every penny they earn. They started putting all that money for a rainy day. So even though that Japan tried to get itself out of this crisis, people were afraid to spend. And that's one of the most dangerous things you can actually create in your economy, where people are afraid to spend. Guess what the government did in order to fix that crisis? Now, the next chart perfectly illustrates what the government did. So this is 1995 when the bubble burst. And as you can see that the debt to GDP ratio was around 70% probably, maybe slightly more than that, maybe 75%. No, it's more than that, because it's probably more than that. Let's assume that it was around, let's say it was 90%. Let's say it was 90%. This is Japan's debt to GDP ratio. And from 90%, it has grown to 245%. Now, I want you to ask yourself a simple question. Why? How on earth did Japan's debt grow so significantly to 200 and almost 50% of its GDP? Like, why? Isn't that a really good question? Like, the economy did not grow. Look at the economy. The economy actually shrunk during that period, but the debt actually increased significantly. And the answer to that question is very simple, because Japan during those period, it started printing money in order to get itself out of this deflationary period. And what do you think has happened during this time? Of course, it couldn't actually do that. And why it couldn't do that? Because when the economy enters into a deflationary period, it's not easy to get out. It's not easy to simply print your way out of it. Japan tried everything. They brought interest rates to 0%. Imagine having 0% interest rate. It started borrowing money, printing money, throwing money into the economy, literally just printing as much money as possible, where its debt to GDP ratio grew from 90% to 250%. But it did not work. And even though that we are in 2024, Japan's economy is still suffering. Yes, to a certain extent, maybe they actually fixed their deflation, but still, when the government is printing so much money, what do you think Japanese companies are doing? They're taking that money and giving it in form of dividends to their shareholders. When people in Japan are paid money, they go and they save that money. And why do they do that? Because they don't have faith in the economy anymore. And how is that related to China? That is the most important question we want to ask ourselves. Is China on the brink of facing the exact same crisis that Japan has been facing over the last, that's almost 3 decades. Yeah, that's almost 3 decades, yes. So Japan's economy did not grow for 30 years, or more than that probably at this point. You see, the culture in China is very similar to the culture that we have in Japan, where people prioritize saving money over spending money. And that might seem very great for you personally when you want to actually build wealth. I really encourage you to actually learn how to save money, put money aside, don't use credit cards. But if you talk about in terms of economy, then it's really bad for the economy when you're saving your money, because you're slowing down the economy. If you want the economy to grow, then you have to take your money from the bank and go and spend, get yourself a new iPhone, buy more stuff from Amazon, do whatever you want. That is going to stimulate demand, and that demand is going to grow the economy. For you personally, it is bad. But for the economy overall, it is really good. So I'm not really now talking about you personally, but in the economy overall. So when people in China have the exact same mentality as people in Japan, where they save money, because if you kind of pull out the data right now, you'll find out that people in China are one of the highest savers in the world, if not the highest savers in the world. So when people are like, wait a second, we had a pandemic, the government did not actually bail us out, we were actually in a real crisis and we had to save ourselves without the government, and now we might be on the brink of another crisis with Taiwan, for example, and sanctions or anything like that. So we might actually save our money. The second problem is that China is facing a real estate crisis, and that real estate bubble might actually burst in the foreseeable future. And people are like, property prices are going down. So why do we actually buy another property if property prices are not going to increase? So we better actually keep our money in the bank and do something else with it. The second problem is that a lot of this growth in Japan happened because of government subsidies, where government actually subsidized some of these costs. And that's why Japanese companies could actually easily outcompete American companies. The reason is because government subsidies. Guess how Chinese companies actually survived and thrived in the last 50 years? I mean, all of those Chinese companies, Huawei, BYD, what are the other companies from China that we have? All of them are subsidized by a government to a certain extent. The reason that Chinese actually dominated on electric cars, solar energy, 5G, is because the government actually threw a lot of money into these companies, and these companies could operate at a loss and wouldn't really mind if actually losing money on their products. The exact same thing was happening with Japan, and it created a bubble. So you can see that China is going through the exact same way that Japan actually went. The second thing is that, or the third and the final thing I would say that gradual slow growth is always better than fast growth. The reason what makes the United States such a solid, stable country compared to other countries is that the United States for over 200 years has been growing stably at a rate that was not really significantly fast, but it was very decent. And that growth has been happening over a very long period of time. Now, all those countries that started growing tremendously after World War II, such as Japan and China and other countries, saw their economies dramatically rise. And when your economy rises too fast, it turns into a bubble. The United States experienced something like that multiple times. It turned into a bubble and the bubble burst. But it wasn't really on the scale that these countries actually went to. And that's why we have news such as this. China is giving money for free to its citizens. China cutting interest rates. China is giving billions of dollars to the banks. Why? Because China is afraid that it might be on the same road that it might actually cause a deflation, just like it happened to Japan back in 1995, and that is still happening until today. So if you're wondering what is happening with Chinese economy, now I'm not saying that China will actually face the exact same problem. China might actually be able to solve this problem, and China might not actually face a deflation just like we are having right now over here. But that could actually happen. So if something like that happens and the Chinese economy slows down, that might actually hurt the global economy and stop the global growth, because China is investing in a lot of other countries. China is the major trading partner to a lot of Asian countries, African countries, and if I'm not mistaken, China is still the largest trading partner of the United States. That could be double checked. So anything that would actually, if anything like that would happen to the Chinese economy, if China is going to enter this deflationary period in the foreseeable future, it could actually lead to serious consequences to the US stock market, both positively and negatively. Thanks for watching, and I will see you in the next one.